Based on the data provided here, calculate the items requested. Here's what we have. They tell us the annual depreciation is $3,000. The current year's loan interest is $750. Insurance, $980. Average gasoline price is $3.50 a gallon. Parking tolls are $820. The annual mileage, 15,600. We get 24 miles per gallon. License and registration fees are $165, and oil changes and repairs are $970. Now, we're asked to calculate the total variable cost, the total fixed cost, and the total annual operating cost. And then we're going to also calculate the operating cost per mile. All right. What are variable costs? Well, they're costs that vary directly and proportionally with the level of an activity. So as an example, if we owned and operated a pizza shop, we sold pizzas for $10 for a large pizza, assume that's all we sold, and the cost of the ingredients was $4 per pizza, it would cost us $4 to sell one pizza, $40 to sell 10, and so forth. So let's look at this calculation. The total variable costs, we've got to figure out the level of activity to come up with that amount. So we take the annual mileage divided by the miles per gallon times the gas price, right? So if we want to know the cost of the gasoline, which is $3.50 per gallon, we've got to take the annual mileage, 15,600, divided by miles per gallon. All right, that'll tell us if you divide annual miles by miles per gallon, that's the same as taking annual miles times gallons divided by miles. Mileage cancels out and you calculate gallons. So now we have gallons times the gas price per gallon, which is $3.50. Okay, so when we do that math, then we have to add in the oil change cost. We consider that to be a variable cost because we're going to need more oil changes depending on the level of activity, meaning we're going to need oil changes the more miles we drive. Another way of saying that is we will need more oil changes as we drive more miles. So that's considered to be a variable cost. Same thing with repairs. And what's the last item? Parking tolls. Well, the more miles we drive, the more parking and tolls we're likely to incur. So we're going to consider that to be a variable cost. Add that all up, we get $4,055. Okay, and then of course we would just drop it into the location they want it. Now, let's talk about fixed costs. They are costs that remain constant regardless of the level of activity, and this is within some reasonable range, right? So in my pizza shop example, a typical fixed cost would be the supervisor's salary. Assuming the supervisor doesn't get paid a commission, let's assume the supervisor makes, I don't know, $50,000 a year, regardless of whether they sell 10,000 pizzas or 20,000 pizzas. And when I say within a relevant range, let's assume we sold no pizzas. Well, then his cost will probably go to zero because we're going to close down the pizza shop. It's not doing very well. But within a relevant range, the fixed cost will remain the same. Okay, so the fixed cost would be depreciation. They just tell you the annual amount of depreciation is $3,000 per year. It doesn't matter how many miles we're driving. $3,000 is the annual depreciation. Same thing with the loan interest. The loan on this vehicle, or assuming it's on the vehicle, right, is not based on the miles driven or insurance or the license and registration fees. Okay, so we add all that up, we get 4,895. So if we add the two together, we come up with 8,960. Now, if we were to calculate the total operating cost per mile, here's what you have to do. You've got to take the total annual operating cost, we just calculated that as 8,960, jotted it in here. right? We've added these two together to get that amount. And we divide it by the annual mileage, which they gave us as $15,600. If we slide back up, there's where the 15.6 comes from. So if we divide the 8,960 by 1560, we come up with 0.57 or 57 cents per mile. And that's this problem, everyone. Thank you.